Has anything you heard from the Fed last night changed your view? I pulled up the work function on the Bloomberg, shows a 61% chance now of a rate hike in December.
No, not really. I think we thought this was not going to happen. It was an easy pass for the Fed. Some of the economic data was a little bit soft, to Yellen's point just then. I think with the political and geopolitical events we've had in the last few months and some softening of data, it was a pretty easy pass. I think all things being equal, I think December looks pretty much shoed in at the moment.
And what about further out? What's your expectation now for how far we go? Because some people say, let's stop obsessing about when we get the next one and just talk about the fact that they're going to be lower for longer and into the future.
Yeah, I think definitely. I mean, this is going to be a lower for longer cycle. I think the rate hiking cycle is going to be very anemic. We were talking on your piece earlier about 250 basis points in 4 years. Well, that's going to be interesting to see if they get there. But I think over 2017, if they get one or two hikes in, I think that's optimistic.
The divisions at the Fed, the dissent within the Fed seems to have drawn quite a lot of attention. Some people marking that as quite significant. How significant for you when you see somebody like Eric Rosengren, who was always dovish before, now sounding a little bit more hawkish?
Yeah, I think there's definitely a motivation from some members of the Fed to try and get to sort of a normalisation of rates, whatever normalisation of policy means these days. But I don't see too much in that. We've got a political cycle that's coming to an end, or got an inflection point on the 8th of November. That's going to be very important for the Fed to see how the markets react to whatever outcome that is as well. I think between now and the December meeting, I think we've got 3 employment reports. We're going to have the growth numbers as well. Yellen, in her statement last night, also talked about the slippage of inflation expectations. So inflation is an interesting one as well. So we're not seeing any real embedded pernicious inflation in the system. So I think they can, they are seeing that the risks are asymmetrical if they hike too early.
Talking of inflation, I've pulled up the chart here which shows headline PCE inflation and core PCE inflation, both of them stubbornly below 2%. Of course, the Fed has a mandate around, well, policy acts with a lag, and they have to look out to a couple of years hence, don't they? So did you hear anything yesterday that told you more about their stance on inflation? They seem quite divided on inflation.
Yeah, I mean, they've obviously got a 2% inflation target, but if you look back over the last couple of years, or even since the financial crisis, and you've seen the behaviour of the break-even. So the break-even rate, which is the spread between the nominal and the inflation-linked bond market, is something that Yellen and Bernanke were very keen on following, and as part of their metric, it's been stubbornly low and subdued, and that's a really good indicator of inflation expectations going forward. So they have this 2% target. The break-evens and the inflation rates are going to be very subdued for a significant amount of time, I think.
So do you think with this as the inflation picture, it's going to be difficult to hike? I mean, they're still talking about doing it in December, even with inflation looking this subdued.
Yeah, I think that's the point, is that there is no one point that they can hang on, so this is why we need to hike. I think there's a feeling that we need to normalise, we need to get to a rate cycle that feels a little bit more normal. But if you look at the macro numbers, the employment part is probably the most positive part we've seen in the sort of Fed story. But is employment actually coming to the real economy in terms of inflation expectations? What we're seeing in the market is no. We're not seeing any of this. So do the Fed have to tackle any embedded inflation expectations at this point? No.
Donald Trump has alleged, of course, that the Fed has kept interest rates very low to flatter the current administration in the United States. Janet Yellen very fiercely defending the Fed's independence and saying that they don't dabble in politics in that way. They do need to take into account what could be the market moves around the political events of early November, though, don't they? Just in the same way as they watch what happens in the Brexit referendum in the UK. You know, they need to be aware of the market machinations that could happen. I mean, a lot could change before December. Yeah,
so there's two things there. If you look at the fact pattern of the Fed's independence pre-Trump coming onto the scene, it's been pretty stable. Their data points, their analysis have been pretty consistent. And so I don't think that has too much leading into the political cycle or Trump's comments. But going beyond that, or around the 8th of November and going into the next Fed cycle, I think it is important. The central banks are mandated with price and market stability. There could be significant market impact if you have different political outcomes. And I think the Fed will be keeping an eye on that, definitely.